Hi there. Welcome to another edition of Talk Stocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Bill Sheriff, Executive Chairman of enCore Energy, with us today. Trades on the TSX Venture Exchange under the symbol EU, as well as the NASDAQ under the same symbol EU. Hey, Bill, how you doing today?
Doing great. Thanks for having me.
Hey, thank you. You must be a really busy guy these days, being a domestic producer of uranium. So really appreciate the time, especially since it's sort of the first major day back here after PDAC last week. Maybe for those of you who don't know you and your background and everything that you bring to sort of the mining sector, could you give a little rundown on who you are and what you've been up to?
Sure. I'm a geologist by education. I have a couple of degrees in that, but spent quite a bit of time in the financial markets as well as a broker and market maker. So, coupling that and struggled for a few years in the gold business, but in '86, I bought Union Carbide's worldwide exploration files. And they were one of the major uranium producing companies for an awfully long time. So that got me started in uranium. And then in 2004, I met Jim Watt and Paul Matisic, and we formed what was Energy Corp. Went from a 1.7 million market cap in '04 to a 1.8 billion in '07, '08 when we sold it out to Uranium One. I carried out on the board of directors with a number of the technical people from Energy Metals. And after a couple of years of that, left to start enCore. And at that point in time was right before Fukushima. We raised some money and basically had a decade of time to plan our future. At Energy Metals, we were involved in, I think, 5 M&As, building the company over that 30-month period. And so, that kind of heritage has continued on with the new company enCore. In 2019, we saw the sea change coming in nuclear, and we got quite active. And part of doing that was searching for a CEO. We were able to bring Paul Goranson on board. Paul's probably the most experienced ISR plant builder and operator in the Western world. And he's built the last 4 or so plants and operated more well fields than you have fingers and toes. So he's a great guy to lead us forward. He was formerly Cameco Resources president and in charge of their in situ. So he brought with him a pretty sizable team as well. And in fact, his contacts that have worked for him over the years have really been the core of being able to staff up 2 full operating plants. But backing up a little bit to 2019, we were working on an acquisition strategy. We saw the market changing. We had quite a few assets, primarily in New Mexico, a little bit in Wyoming. And but we were looking, obviously, the key to any of these is plants. And so we were able to successfully negotiate the acquisition of our first 2 licensed in situ plants in Texas. There are only 4 in Texas and 11 in the entire country. And later on, we were able to secure the Alta Mesa, which is our Keystone project. It's over 200,000 acres, has 19 million pounds with all categories combined on the uranium resource. So it'll be active for quite some time. We applied for a permit to restart the Rosita plant after about a year of renovation of the plant, and we're able to do that mostly with the staff on hand for about $1 million. So it came in on time and under budget. And then we submitted our permit. 20 months later, we had drilled the well field and were in production. Had a great grand opening literally about a month and a half ago when former Governor Rick Perry and Energy Secretary of the U.S. Was our keynote speaker, and we had about 300 local supporters along with some of our investors there. So it was a great time indeed, and we just shipped off our first yellow cake last week. So pretty exciting times, In the course of about probably 9 months, we've gone from a company with $60 million in debt, $4 or $5 million in the bank, no revenue, to a company now with about 75 or 80 million in the bank. Plus revenue from one source, another source starting up what we're planning, and no debt, of course. So it's been a remarkable transition for the company.
Well, thanks for that overview. Not a little tidbit from my sort of history back in when I was first getting going on the IR side. I worked with a company that you were a major shareholder of and a director in the gold space. So that was maybe back in '05 now. But anyways, you've been a major investor, major financier, major executive in the space. So congrats on the success you're having in the uranium market. And probably the second or third company I ever worked on was a uranium explorer in the Central Mineral Belt in Labrador. And that little company ran up to like, I think 250 a share during sort of 2007, the last time we had a bit of a uranium market. So definitely interesting to see how the uranium market, what's sort of causing it to sort of get renewed interest and see the spot price and things sort of move up. So what better person than somebody like yourself, who's a domestic producer, to get on. So really appreciate that. Maybe you could give us a little overview from like your perspective as like an ultimate insider in the industry, in terms of like, you've witnessed some cycles of the uranium market. You mentioned with Fukushima and things like that. But given the current sort of global energy landscape, where do you see sort of uranium demand in the next sort of short, medium, and long-term sort of future?
Sure. Well, I think the first place to start is this market has virtually no relationship to the one that we saw between '04 through '08. I mean, that was a supply interruption market. You had MacArthur River flood in 2003. You had Cigar Lake, the biggest in the world, coming online with three separate floods, although two of them are within a few days of each other, so you can call it two floods.
Right.
And then you had a really hard time getting on. 2006 or 7 Ranger, the big Australian open pit, was flooded with monsoons. And at the same time, Rossing was proclaimed dead in 2006. RTZ said that it was going to run out of ore and they were going to close the mine by '07. As with many of those announcements, that one was premature since it's cranking along quite nicely now. But all of those supply constraints were really a concern of these companies being able to meet their contractual obligations. And so that's what saw the market propel itself, 04 to '08, culminating with hedge funds really driving the last frenzy, probably 50 or $60 of that spike. Compare and contrast that, a period when we had quite a bit of opposition to the nuclear industry, and public opinion certainly wasn't on our side, and the media was horribly against us, and a contracting use base, because a lot of countries were shutting down nuclear power at the time, or certainly had planned to. And you look at the current market, and it's completely different, other than the commodity. I mean, this is based strictly upon a demand pull. We're seeing increasing demand starting in the U.S. with extended lifespans of reactors. You're seeing the promise of small modular reactors coming on, albeit they've probably been delayed a couple of years due to lack of availability of HALEU, which is a special fuel they use that's enriched higher than the average nuclear reactor by about fourfold. And you've got, worldwide build out. You're seeing new plants built in China, probably one every couple of months. It's crazy, their build rate. You're seeing, India going towards uranium and away from what they'd long been trying to go with thorium. There's many advantages built into the uranium side. So India is sort of the proof in the pudding on that. But you're also seeing, Eastern Europe, the Mideast. I mean, there really is a renewed build everywhere. And then, of course, the small modular reactor. All of this is going into the simple fact the U.S. is the world's largest consumer. We burn about 47 million pounds, 48 million pounds a year. And of that, roughly half of it comes from either Australia or Canada, and half of it comes through the port of St. Petersburg. That's Russia, not Florida. And while most of that is Kazakh or Uzbek production, Mr. Putin controls it in the shipping. And so, having the U.S. 100% reliant upon on that is probably not a great idea. We were self-sufficient in 1980, the U.S., so we clearly have the resources and the ability. But as with many products, pharmaceuticals to China, uranium to Russia, we've outsourced it. I always like to say what could possibly go wrong, and now we're bearing witness to that.
Sure.
So, we had first mover advantage. Obviously, we've got a key advantage in owning 3 of the only 11 plants. Almost everything we're doing the first 3 years is in Texas. And its cost of operation is less. We're able to source some materials from Mexico when we're having any difficulty finding them in the States. And, really, it's one of 2 premier agreement states. An agreement state is one that's got an agreement with the Nuclear Regulatory Commission to regulate your activities such that you don't deal with the NRC. And that's a huge streamlining effect. I mean, we were 20 months from submitting our permit to getting into production on our first Rosita plant. I mean, you can't
Wow.
permit a parking lot in most cities in 20 months.
That's
So,
incredible.
we're
Wow.
very happy with that, and we're seeing similar results on our Alta Mesa project, which Texas is the place to be.
The Bitcoin and artificial intelligence, AI, some of these large language models are requiring immense amounts of power for CPUs and things like that. We just saw Amazon announced last week that they'd through their Amazon Web Services paid 650 million for a data center that's supposed to run on nuclear power. Do you think this tech angle is also like quite helpful for the sea change that we've seen, and I guess the embracing of nuclear power as a carbon neutral, completely sort of green power?
Well, without giving any commentary to Bitcoin, and obviously the AI is catching on. Kind of ironic that you can't run one without electricity, either one really.
Yeah,
And it really highlights the shortage that we've got, because even without those new substantial uses that you point out, we're already at a deficit. I mean, the supply just is not keeping up with the demand. There are several U.S. utilities that are still looking for 2024. And that's why you see the strength in the price,
right.
and you're starting to see the strength come into the term prices as well. A number of utilities are looking in 26, 27, and the further out years. But you take that constrained supply right now, and then you add even more demand to that. Where's it going to come from? I mean, I believe that you're going to see supply chasing demand or demand outpacing supply is probably a better way of putting it. Demand outpacing supply for probably the next 5 to 10 years easily, before there's any sort of an equilibrium built in there, and then it's still going to be a pretty good uranium market. I mean, I think you look at uranium now, you have to think that really it's akin to being asked if you'd like to invest in oil and gas in the 40s or 50s. Not every year is going to be great. There are going to be some horrible 5-month, 6-month periods or quarters. But by and large, it's going to be a well above average growth market.
Well, I guess as someone who's an astute speculator in the resource market, I guess one of the things you want to see is demand outstripping supply, because it seems that having firm, strong sort of commodity prices, which are going bottom left, top right, up a chart, price increases. That tends to be what help drives the equities. Would you agree?
Well, certainly it gives us a good footing, and you really, I'm not sure it's real healthy to get a huge supply gap unless we get some elasticity from the regulators to allow things to get into production quicker. Uranium's not that uncommon. It's the 8th most abundant element on the planet. What is uncommon is the permitting regimes where you can get it to market quickly, and more than that is the expertise to be able to do it. I mean, we've been in essentially a downtrodden uranium market for 44 years or 45 now, since 3 Mile Island, just now starting to really get going. And the big effect of that was, Cameco may have carried on, and Kazatomprom has come on during that time frame. But really, in the U.S., world's largest consumer, again, there's been very little activity, so we're missing a number of cycles of graduates out of technical schools, universities, chemical engineers, petroleum engineers, which we've converted over, or hydrologists. And so that's really what the real shortage is, and sort of the hurdles to getting into production are permitting and personnel.
Right. I was going to ask about that. How have you? So you've indicated you've been able to retrain people from like petroleum side of things.
Well, we haven't really retrained them, but we do get a lot of petroleum folks, because after all, we aren't really mining. I mean, we're much
Right.
more into oil and gas. We do all of our uranium recovery through the drilling of wells and pumping of fluids, and not unlike the oil and gas. We have multiple levels of which are productive, different pay zones, if you will. And so there's a lot more in common with the oil and gas industry than there is the mining industry. In fact, our regulators aren't even from the mining industry; they're from industry, the same groups that would regulate oil and gas. So it's not a matter of converting them so much that there's certain applications that
Sure.
many of the folks involved in the industry have petroleum background, but we've got more than our fair share of talent, and here again, a lot of it's due in large part to Paul Goranson, having worked in the industry, has a real good reputation, so people want to come back to work for him.
Excellent. Well, that's a pretty good segue. Maybe we could get into like a good sort of overview on enCore. And you guys have you guys use ISR in situ recovery sort of process for recovering uranium. So maybe you could give us first an overview on like the assets in the company, just as it is today. You know them really well because you helped put it all together. And then you can talk a bit about your technical processes of how you produce and how it's different from open pit or underground mining.
Sure. Here again, the first two assets, Kingsville and Rosita in Texas, and we've picked up a number of other deposits. Those are our two plants with some deposits at Rosita. These are central processing plants where we bring in feed from remote locations, several hundred miles away at times, although everything we're looking at in the first 3 years is within a 100-mile radius of Corpus Christi. So we get some real economies of scale or operation being all in the same spot. Then, of course, the big project was Alta Mesa, which is 200,000 acres of private mineral rights. That's huge. Even on the state of Texas map, it's a big dot on the map, and that of course will be our main focus for many years to come. We did just joint venture or sale a 30% interest of it to Boss down in Australia for total proceeds, including a 10 million placement of 70 million. That's what really propelled us. And the reason we did that was we were having to go hand to mouth. That is, take all of our assets and move them forward one at a time in a very linear fashion, as opposed to being able to move all of them forward at the same time. Much better that way. And of course, we looked at the Boss transaction as we'd look at any M&A, even though it wasn't really a classic M&A. It had the earmarks of it and sizable. We have to see an acceleration in the pounds that we produce in terms of the calendar or in terms of the quantity. And those are the two fundamentals that we look for in any acquisition or any merger opportunity. And that checked all the boxes for us with Boss. And so we're able to take some of our other projects and move them forward by as much as a year. But more importantly, move all of them forward at once. And so you'll see us while we're expanding operations at Alta Mesa. We're also working on Upper Sand Creek, which is two separate deposits, very close proximity, within that 100-mile radius around Corpus. And both of these deposits will provide feed to Rosita in the coming year or two and last for a number of years. And then we've also got Butler Ranch. That's another one that we've got some assets on that we'll be producing into the satellite feed. At the same time, we're starting a drill program this year on our very large Dewey Burdock project in southwestern South Dakota. In fact, it runs across the border of Wyoming, just the deposit itself. No one's really looked at it on the west side of the border into Wyoming. About 5 miles distant, we have our Dewey Terrace project, which is sitting on the same set of roll fronts. Now, roll fronts are where the water comes down, deposits the uranium in the sedimentary formation, and you follow that along to exploit the uranium. So it's very predictable when you move along these roll fronts, finding additional uranium. So we'll be trying to connect those two. And based on rule of thumbs, we're getting 17 million pounds at Dewey Burdock now. Here again, a multi-decade property. But we look to be able to enhance that considerably by going into the Wyoming side. And then it gives us a bit of leverage in terms of where we ultimately build the plant, which side of the border might wish to have the tax base, et cetera. So, hopefully that'll give us some, optionality and move the asset base forward. And that program starts here in the summer of this year, the drilling. Then, of course, we've got Gas Hills, which is, one of the better economically situated deposits in central, west central Wyoming. Very prolific brownfield site. When we run the numbers on that, we've got an IRR that's quite favorable compared to most. It's approaching triple digit, and just spectacular. It's not as long lived. It's only about 7 or 8 year mine life or project life, but there are other assets in the area that we'll look to kind of extend that with. But that's sort of the highlight of what we've got now. Sure. And then, of course, we've got some development opportunities. We've got a lot of non-core assets in the company where we've picked up opportune properties at a very minimal cost, usually by staking. And we tend to deal those out either into joint ventures or outright sales. Over the course of the last 2 or 3 years, we've been able to bring in $30 million in non-core asset sales. So, not certainly, not enough to keep the company going, but it's $30 million worth of dilution we didn't have to incur.
Fantastic. That's more of a market cap than just in market cap than a lot of companies out there. So congrats on that. In terms of the projects outside of Texas, like Wyoming and whatnot, would those be more looked at as traditional sort of hard rock, or would those also
No,
be
only thing
amenable to ISR?
yeah, the only thing we do is in situ. We won't even touch a hard rock project. We don't have miners. We've got engineers, chemical engineers, hydrological engineers, hydrologists, geologists, but we don't really
Sure.
have an explorationist, nor do we have a mining group. So
Right.
we're sticking to what we do best, and where we have a competitive advantage with both of our plant sites have personnel all the way from the board of directors all the way down to the supervisors in the field that are turning valves that have had experience in situ uranium, and that's one of our key competitive advantages. In fact, our biggest strength.
Maybe you could go into that a little bit more. I'm not sure if everybody understands what ISR sort of technology is. It is sort of also used a bit in the recovery of other commodities and metals. But I know you're a real expert at it. So if you wouldn't mind giving a bit of an overview on how it compares to traditional sort of mining.
Sure. Well, I'm no expert compared to most of the guys we've got on staff, that's for sure. But
Sure. Well, you know what? You've been able to assemble the expertise.
there
So
you go. That's
put the
that's
band
right.
together.
That's right. And essentially, you go into an area where the sandstone has all those sand grains coated with uranium, and it's under the water table. In these areas, the federal government declares it to be an aquifer exemption zone, so they don't want you drinking out of it. And so once you get that, we actually start by pumping the groundwater out of this sandstone formation. And once it reaches the surface, we bubble or inject oxygen gas. That's all we use is oxygen, occasionally a little bit of baking soda, and reinsert that into the same formation in a series of recurring injector or recovery wells. And as a result of that, we're able to, the oxygen in the water dissolves the uranium because uranium would much rather, it's very soluble in many, many instances. So once it's soluble, then we pump it to the surface and run it through essentially an industrial water treatment plant. It's an ion exchange system and selective ion resins that will grab the uranium out of solution, uh, concentrate it, and then we run it through the plant and recover the uranium from it. It's that coated resin that we actually ship from the remote sites I mentioned earlier for the satellite feed into plants. You have a small remote ion exchange plant actually at the site, and then you truck a slurry of that material once it's fully loaded with uranium to the larger central processing plant for processing, and then you recover the yellow cake, and that's what you ship out.
How would that compare to like traditionally like costs, open pit underground and then ISR? Is it
Well,
depending on the resource and whatnot? It would be price competitive to be able to.
we're very price competitive. You'll see some of these really tremendous grades of the Athabasca, and here again, they're very nice, and it's a completely separate way of mining. We don't move rocks; we move water, and as such, much lower cost, much lower time on permitting, and much shorter reclamation time. And I think that's important because once you run this process through for a couple of years of injecting and recovering, injecting, recovering, and you refortify each time with oxygen, um, then essentially recovery amounts to turning off the oxygen, continue to circulate the water through a reverse osmosis process. And sometime within a couple of years or thereabouts, you'll be looking to be totally signed off and move on. So it's a very economically friendly operation as well. And that just adds to its economic benefits. So we're highly competitive with the much higher grades.
And just so I'm clear, and everybody who watches this can be fairly clear, because we don't know the company as well as you. Um, so instead of having like a mill type setup, or you'd have like a processing facility, how many processing facilities are fully sort of built and sort of licensed to be able to produce from today that the company owns?
Yeah, there's 11 in the U.S. and we own three of those. All three that we own now are in Texas. We will have to build a an additional plant in Wyoming, or perhaps two, one in Wyoming, one in South Dakota, as things progress. Here again, though, our focus is on hitting that 3 million pound a year run rate within the next
Right.
3 years. And that's totally in Texas, all within a 100-mile radius of our home office.
And out of the three that you own, how many are in production and working today?
One is in production today. The much bigger Alta Mesa plant, it looks to come on if everything works out as we anticipate. And then we have the Kingsville plant, which is a sister plant to the Rosita, actually same set of blueprints essentially. And you can plug and play the different pieces of equipment. At the time that we need to increase beyond those capacities of 800,000 pounds a year on Rosita and about 2 million plus on Alta Mesa with some minor modifications, then we've got another 800,000 pounds at Kingsville. We could fire it up. Or what's perhaps more likely is eventually consolidating that equipment with Rosita such that it itself has doubled its capacity to 1.6.
Right. Wow. Well, there we go. Thank you for clarifying that. That's clear as mud now. Maybe we can we'll sort of move on a little bit. Maybe talk some regulatory, environmental sort of stuff, if that's all right. So you mentioned before you've got, obviously you're kind of regulated a little different than a traditional mining company. Would it be, you obviously had a very quick permitting sort of process and being able to get something into production. You indicated 20 months. That's like world class, exceptional, as compared to things like even here in Canada where I'm located. It takes a long time. What are your thoughts in terms of like the regulatory environment for new uranium production in the U.S.?
Well, here again, I think it's key that you look at the agreement states. And there's a number of agreement states. Utah's an agreement state, Colorado, Wyoming, and Texas. But in terms of in situ, you're really only looking at Texas and Wyoming. And as such, that's where you're seeing most of the interest in either renewed or initial ISR production. And I think that's going to persist. I don't really see a widespread push unless the regulations change. We still deal with the federal regulations. We just deal with them through the states. So they're much more motivated, much more of a one-window stopping and shopping experience, if you will, for those permits. So I think you're going to see that favoritism continue in those two states.
Excellent. We'll switch gears a little bit here to some financials. Maybe you could discuss, you kind of touched on that you recently did a deal with sort of Boss Energy, which really sort of changed the magnitude of the company. So, going from being in a deficit of capital to having surplus and be able to move it forward. Maybe just in terms of whatever you've last sort of previously disclosed, how much cash do you have on hand and what's sort of the market cap of the company today?
enCore is very well situated. We have about 75 to 80 million in cash currently and no debt. Income coming in from the Rosita plant, soon to be added or augmented significantly by the much larger Alta Mesa project. We also have a market cap currently of about 700 million US and look forward to continued growth in that.
You guys are fairly recently listed on the NASDAQ. How was that? I would imagine that's opening up to further pockets of liquidity and more liquidity in your stock.
Well, last year we joined on the NYSE American, and that's a big increase in our shareholder base, of course. And going to the NASDAQ should give us a bit better liquidity, especially in the Far East and Asia. And we really are looking forward to our bell ringing session, which is March 25th here in just a short period of time. But any of those listings, they don't help you if you don't work them yourself. And so you've got to make those contacts. But obviously the increased base and status, certainly helps, and having that pool of liquidity really entices some of your bigger funds.
And any sort of key sort of shareholders that you can sort of talk about that are disclosed? Any sort of institutions that are over the 10% or that you don't, or that wouldn't mind being mentioned, that are current shareholders of the company?
Yeah, there's really not any over 10, but there's a number of filers on the U.S. I mean, BlackRock, I suspect through their ETF is the biggest holder. But we've got most of your household names in Canada that are very large holders. If you go through our news, you can probably find some of those. But they're the household names in Canada. And then in the U.S., we've got probably 20 or 30 institutions, many of them only owning 0.5%, some of them as much as 2 or 3. We're probably about 70% institutionally held. And a significant amount of the rest is high net worth individuals. And then, of course, you have some retail as well, which is, always good to have.
And what about insider ownership? What percentage does that stand at today?
We've gone through such growth and financing the Alta Mesa project that we're probably under 5% on insider growth. Ownership, I'm around 2%.
Yeah, good stuff. That's great with a 700 mil market cap. No issues there. And then you mentioned a little bit of a strategic partnership there with Boss Energy. Maybe you could explain a little bit about who they are and what the rationale behind that is.
Boss is probably the leading new company in Australia. They're putting a big project into production as we speak. It too is in situ. One difference between Australia and the U.S., though, we use oxygen; they use sulfuric acid. So we do have a bit of an edge on reclamation, but they also get better recovery with acid than we do. We use oxygen by choice here in the U.S. and just a cleaner way to go. But they're a very strong company. We see philosophically with them such that we felt like entering a long-term relationship with them. It's a lot like a marriage. Would you have a joint venture going? Everything you do with that project is got a whole other set of eyes to go through and a whole other company ownership. Even though we maintain 70%, we still have a partner, and we value that partner quite a lot. It does open the door to potential discussions of other arrangements, but nothing is cooking in that regard at this point. And we settled on that relationship of 70-30 because enCore, basically after a number of approaches from Boss, sat down and really put a pencil to it and determined how much money we needed to move our portfolio forward. And that was the number we came up with, and that was the percentage that fit with that. And I think you'll see a tremendous acceleration at Alta Mesa as a result of that, as well as our other pipeline projects.
Were you key in getting that deal done?
I was present. I wouldn't say key. Boss approached us, and we just worked through it rather diligently. And I think Paul and some of the back office probably had a lot more hours put in on it than I did. But at least on the negotiation end of it, I was made myself present. So.
What's a typical day in the life look like, executive chairman?
Well, I don't have to look at my phone to see why it's not ringing anymore. I'm constantly picking it up. These are very busy times. We do keep a pretty healthy pulse on the industry because we've already gone through 3 major M&As in this company as well as our track history. And, we do have the legal background and the accounting department in place to perhaps actually thrive on M&A, whereas a lot of companies that are our size are much smaller tend to avoid them. And so that we view as a key building stone for us, as well as the organic growth we're going to get from our very large portfolio of assets, 2 of which will be in production here within the next couple of months. So one currently and then the new one coming on. Between what we've got going, between conferences and speaking to investors and taking about 400 or 500 emails and a couple hundred calls on a good day, and monitoring the playing board, if you will, for possible M&A activity. Not a lot of time to stop and think or stop and do anything else. So it's a lot of fun. It's being very productive, and I think you're going to see the rewards have just started coming to us.
Any other sort of key short-term milestones that investors should pay attention to watch out for over the next 6 to 12 months?
Well, clearly production at Alta Mesa is the really big one. That's going to be a very exciting time for the company. And Paul had built the plant originally and operated it for a private ranching company and also for another company before we bought it. So is quite familiar with it, and we're seeing some really exciting grades in our drilling. We hope to exceed our expectations there comfortably. And I think once you start seeing the application of this cash into moving forward to other projects, Upper Spring Creek, the two halves of that being in the news towards the end of the year, I think you could see a nice steady improvement in terms of what we're doing. We've had a very, very ambitious growth period the last couple of years. We've exceeded those expectations, and have an equally exciting future planned for the next year or two, with taking our assets we have, moving them forward, and always being on the lookout for others.
So when you go and produce yellow cake, who do you sell that to? Who would be like the again, without using any names necessarily,
Yeah.
but who's your customer? What type of customers would they be?
We have 5 contracts in place. One is with a trading company. Other 4 are with U.S. nuclear utilities. All of the contracts that we've signed ourselves are with the utilities. The other one was a legacy contract that came to us with the plants when we first got the first 2 in Texas. And that's who we see as being our primary customer, are the U.S. utilities. And that's where there's a shortage in the industry. There's a critical shortage in the U.S. And that's where we see our niche. And there's some definite advantages to working in the U.S. and having a good relationship with not only the federal government, but the state governments in which you work and local communities.
Hey, excellent. Any final thoughts here before we wrap up?
No, other than I think we're just at the beginning. I mean, a lot of the investors are, quick money, and we've had a couple of good little runs here in the last 2 or 3 years. But I think the ball is really just getting going. And, I think, our dependence upon Russia for not only the basic uranium, but also the enriched products that ultimately go into the reactor are really creating a huge opportunity for the U.S. It's going to be a bit painful to catch up. We won't do it as quick as we want to, but it's just a very fertile environment for growth all along the nuclear fuel cycle.
Hey, excellent. Well, Bill, I really appreciate the time. Thanks for spending a bit with us and giving us sort of a first look at the company. Hopefully you'll come back and join us on another one. Maybe we can have you back after you get Alta Mesa up and running.
Absolutely. That'd be great. Look forward to it.